We have a very, very special guest to start the show with. Mr. Vipul Jhaveri, Managing Partner, Tax Deloitte India, is with us. Vipul, thanks so much for taking out time for us. The run-up to the budget has started. What are the big changes that you expect in FY23 now?
Right. So certainly, COVID overhang will continue, and in the same vein, I think the reforms also must continue. We have, seen a certain recovery phase, but yet from a sector-specific point of view, there could be certain sectors which are yet trying to find its bearings, and then there are yet sectors like IT, for example, which are thriving. So there will be certain sectors like hospitality, for example, which is yet responding to this COVID. And there are those which are doing better, and IT, for example, is thriving. From a budget standpoint, the government will have to, really have a focused approach to continue with their reforms and ensure that adequate support is received by those who need that support, and incentives for those who are actually doing well. Technology, therefore, has really stood out in the global context also. If we see what has kept the world economy going is the capability centers or the shared service centers which are in India. They have kept the businesses going and growing. In fact, despite COVID, there has been very little or no disruption, and therefore GCCs really need to be thought about as a separate sector, given that we have more than 1,500 GCCs in India, and all of them are supporting large global businesses, and therefore technology and talent really has a big play. We have evolved, our GCCs in India have evolved from a service provider to a value creator, and therefore I think a good amount of focus needs to be given to that. Exports, again, there is a big opportunity because of the geopolitical issues, as also realignment of supply chain, and therefore India has an opportunity to get into a $1 trillion export market, which is there for us. And last but not the least, climate change and environment is becoming important. We have an important role to play in this, in the global context, and therefore specific policy measures on the fiscal side also need to be introduced in terms of how corporates will contribute into this climate change measures.
Right. Right. So a lot of items have been, considered out of budget as well of late, especially in the last 18 to 20 months. What do you think the corporate sector will be expecting in terms of big ticket changes? Any clarity on anything, any sort of things? But a lot of it has also been out of budget in the last 18 to 20 months.
That's true, and government has repeatedly said that budget is no longer going to be an event, and it is more of a restatement of our financial state, as also tweaking of certain measures that need to be there, and we need to be nimble at it, and therefore we can't wait for a year to make any policy changes. Having said that, some of the things that could be considered in this budget is CSR expense, for example. The private sector has contributed significantly in supporting the government in dealing with the COVID effect across the wide spectrum of the society. And therefore, there could be a good case for the CSR expense to be considered as a tax deductible expenditure. Similarly, there is a recent change that was made where goodwill on depreciation on goodwill. That the law was changed retrospectively to say that it will not be permissible. But given the lot of change that is happening, chain and churn that is happening in the way the businesses are going to get either acquired or repositioned, there is going to be goodwill that will get created in any such business reorganization, which is the order of the day. And it is well established the practice in many parts of the world in fiscal laws that goodwill, which is paid for goodwill and not just accounting goodwill, is admissible as a tax deductible cost. Now, either by way of depreciation or by way of some amortization. So one of the things I believe which would be welcome is bringing about certain deductibility in context of any goodwill created which is paid for. And then, of course, the evergreen issue that is cropping up on account of digital transactions with reference to significant economic presence. How do you apply that to digital transactions? And also the overlap or clarity with the equalization levy. I think that also is necessary given the tremendous increase in growth in digital form of doing business across the globe
Right.
and definitely in India.
Right, Mr. Jhaveri. This is Cheryl also joining in the conversation. And apart from digital taxation, one of the key policies or the bill that we were awaiting was that cryptocurrency bill, which was slated to be introduced in the winter session of the parliament, which hasn't happened. Can we actually expect the government to go ahead and clarify on what could likely be the contours of the cryptocurrency bills? What would be your recommendations on that particular front?
Absolutely. Cryptocurrency, I think, it is in fact overdue. Any framework from a taxation side is required for the clarity because of the increasing number of transactions that are happening, and it is no longer limited to HNIs. It is getting percolating far below, and therefore certain conceptual things are necessary. For example, what will trigger the taxation of cryptocurrency, or whether in fact it will be taxable, given that there is no specific provision in the law. The question whether it is a capital asset or a financial instrument or a commodity also needs to be settled through the provisions of income tax law. And then how will you tax it, under which head, whether it will be capital gain, business income, what kind of expenses will be allowed, what rate of tax will apply. All of these will flow once a certain conceptual clarity or position is taken by the revenue authorities on its taxation. So yes, it is overdue, and I believe that this is going to happen in this budget for sure.
Right. Let me ask about the individual taxpayers, those who are watching this interview. It affects Aam Aadmi after 2 years of pandemic disruptions caused in the economy and also in the job market. What can the Aam Aadmi expect from the budget to cover this time around?
So individuals are perhaps the most affected in these times. While the slabs have got calibrated to lower the tax burden at income levels up to 15 lakh, uh, the inflation and unforeseen medical cost for self or dependents has put huge pressure on the individuals. So certainly there is merit in finding some innovative solutions to support at least this segment of individuals who are in a special situation because of the COVID circumstances. So, for example, a special deduction for medical expenses for self and dependents would be welcome. Likewise, some kind of a special allowance for dependents for individuals up to a certain threshold. You see, in many countries of the world, while individual taxation can be on a individual as a unit, but there is also a family concept of taxation where a special deduction is provided for the family members, particularly who are dependents. So it is not just the absolute income basis for taxation, but it also factors the dependents who are going to be supported by that level of income, and that certainly is something which could well be considered if we do not at this stage increase the threshold for taxation across the board.